retail. Okay, everyone, focus purely on retail. It's very important now. Okay. Yeah, morning class we didn't take too much because of that internet connection. Not an issue. So tomorrow we'll continue in the morning for the theory part. Okay. Now also I'll take one case study and then one or two case studies roughly. Two case studies will be there. See here, what we'll try to do is cover maximum part, theory part in the morning, and in the evening we'll try to cover maximum case studies. And only what is related theory to this case studies, that will cover in the evening also. Okay. Related theory is very important. Okay. Okay. Up to what time? 8 to 10. 10 p.m. Okay. 8 to 10. Yeah. Chalo, let's take. Yeah. Okay. So here, first case study which we are going to take is on encumbrance factor. Encumbrance factor. Remember, there are two parts to this. One is this encumbrance factor, and second is value of the usable FSI. Okay. Encumbrance factor and value of the usable FSI. So these two questions will come to you in exam. Encumbrance factor and value of the usable SFI. Yeah. Acha, nothing was asked. Okay. Good luck means good part then, because generally vertical horizontal is asked over there. Forget it. Okay. Cleared now, over. Okay. Yeah. Chalo, let's start. Yeah. Find out the encumbrance factor and the value of the usable FSI from the given particulars of the property. So these are the details given for the property, and we have to find the encumbrance factor and value of the usable FSI. These two things we have to find out. So what is given about that property? See here, these problems you'll always face it in your banking also. Okay. First is land area is given as 533 square meter. 533 square meter. Okay. Total built up area is given as 205 square meter. Now, what do you mean by this land area and this built up area? See here, built up means what? Whatever has been built on that land. Means, suppose if this is the land area completely, everyone pay attention. If this is the land area, okay, this is the total land area, 533, okay. This is 533. Then built up means what? Built up will be whatever has been built on that. Now it can be here, it can be here, built up over here, it can be part built up over here also. Anywhere it can be, but within that property, this total built up of this is 205. Okay. So we'll consider only one now. So what we'll do is imagine that this, okay, remember built up is not compulsorily in one place only. It can be in or in that plot anywhere. Okay. So what we'll do is we'll consider this much as a built up. Okay. This much is built. So what is this area now? This area is given as 205. Okay. Yeah. So total plot area is 533. Total built up is 205. Permissible FSI is 1. Now what do you mean by FSI is 1 means? FSI is 1 means if this plot area is 533, I can build 533 square meters full area I can build. But it doesn't mean, now look at this. 533 I can build, it doesn't mean that I'll build corner to corner, full 533 I'll build. No, it's not that. I will have to build by leaving these boundaries. It'll be somewhere, all these boundaries over here. These are, I can build up above. One floor, second floor, third floor, that I can build. But the boundaries are never compromised. Okay. So permissible FSI is 1. Rate of construction cost is 5,000 per square meter. Okay. Rate of land cost is 2,000 per square meter. Desired rate of return is what? 9%. Okay. Desired rate of return 9%. This one. Then usable carpet area is 155 square meter. Monthly rent on the carpet area basis is 50 square meter. So monthly rent is calculated on carpet area basis. Okay. Usual outgoings is 1/6 of the yield. 1/6 of the yield means 1/6 of whatever I am getting. Okay. Means basically rent. Okay. So these are the details given to you in the problem. In exam also they'll give you these details, and it's a 5 marks case study. Okay. So again, we'll just go through it. Land area is given, built up is given, permissible FSI is given. Then see this, look at this first three lines only. Land, built up and permissible FSI. It means I have built 205, my land is 533, so I have more to build, means I can build more. Okay, so how much can I build more? 533 minus 205. So rate of construction is given, rate of land cost is given. Okay, these two parts are separate. Okay, anywhere, see here, these are similar to that what we do in a practical life. Okay, in practical life also, land cost will be different and your construction cost will be different, isn't it? Desired rate of return is 9%. Usable carpet area is 155. So what is the difference between this built up and carpet? What is the difference between built up area and carpet area? Many of you amongst you who have built up bought the flat, okay, flat or built the house, whatever. So there we come to know the difference between built up and carpet area, isn't it? What is the difference? Can anyone tell me? Difference between built up and carpet area? Yeah. Walls, correct. Walls not included. Also, not only walls, there are many other things also. Walls not included, and actually these bathrooms are not included. Here, it's very simple logic. Wherever I put the carpet, I'll use that area. Wherever I put the carpet, I'll use that area as a carpet area. Okay. Many times these passages are also not included. Walls, passages, these are not included. Okay. So move on. Actually, we use correct. Wherever I put the carpet, simple, isn't it? Do I put the carpet in the bathrooms? No. So out. That is out. Then what? Kitchen, it is there. It can be there. Means all this means simple logic. Got it? Move on. Chalo, carpet area is given. Monthly rent on the carpet area basis here. Generally in tier 2 cities, means I'll tell you, tier 2 means what? Except Mumbai, Delhi, Kolkata, and main cities, Pune, okay, Indore also. What happens is rents in tier 2 cities, Hyderabad also, yeah. Rents in tier 2 cities and tier 3 cities are taken one stroke. Means I fix a rent. That rent what I need to get is, let's say, 15,000. So I'll tell that customer, if I'm having the flat, I'll tell that customer rent is 15,000. But for bigger properties, the rent is never fixed like that, 15,000 whatever. It is always fixed on the carpet area. What is the carpet area of that flat? And depend, flat means property. Flat generally is one stroke only. Flat is never that upon carpet area. If you have a huge bungalow, in that case, it is taken on that carpet area basis. Okay. And usual outgoing says 1/6 of the yield. Yield means whatever I'm getting. Okay. Move on. Chalo. So let's calculate. Let's start solving the problems. Okay. So what are the problems given over here? We have to find first encumbrance factor and value of the usable FSI. Okay. So firstly, let's go for, see here, we have divided this problem into three parts. One, see here, I've marked it red lines over here. One, two, and then third. Firstly, what we'll do is cost of construction. What is the cost of construction? So how much have I constructed? That's important. How much have I constructed? Built up area, 205. So I built only this much. So my construction cost will be on only this much. So 205 into what is that rate? 5,000. So 205 into 5,000, right? So this much is my cost of construction. What is that? It is what? 10,25,000, isn't it? Okay. Floor space index. What is FSI? Floor space index. Everyone, huh? FSI means floor space index. Means what? What do you mean by that floor space index? See here, very good question. What do you mean by FSI? See here, FSI means if this plot is 533 square meters, okay, how much can I build on it? Okay, means what? If my FSI equals to 1, then I can build 533 square meter building on this plot. I can build 533 square meter building on this plot. If my FSI is 2, then I can build 533 into 2, means what? 1066. This much building on this plot. So you will definitely wonder that how can I build 1000 square feet on this 533 square feet? Who can tell me? Am I getting wrong somewhere? Means if my FSI is 2, then what? Correct. the building goes on rising. Okay. So that way it can be done. Always remember, here, when we say FSI equals to 1, 2, whatever it is, it doesn't mean the boundaries need to be compromised. Here, boundaries should be there. Let the FSI be anything. Okay. So let's move on now. Got it? Yeah. So cost of construction is 205 into 5,000. Cost of FSI used. So cost of FSI used means what? This is the plot cost. Okay. FSI used means plot. So how much have I used? 205 I have used. What is the cost of the land? 2000. So this much land I have used up till now. So 205 into 2000. This much I have used. See this. Cost of FSI used 205 into 2000. So what is my amount? 4,10,000. So this much cost of land I have used. This is the construction I have used. Okay. Now what is my total cost? Now, what does our house consist of? Tell me simply. What does, when you build your house, what does it consist of? It you consist of two things only. One is plot and second is construction. So total of this will be this 1435, whatever this amount is. Okay. So 1435 is the amount which you get, is the total cost of that, means whatever property you have built in, including land cost and construction cost. Okay. So what is given over there? Desired yield is, what is this? Desired rate of return is 9%. Mean this much I am expecting the return. Means here, this is my expectations, 9%. Okay. So what is my desired yield then at 9%? So 9% on 1435,000. So I'll get what? 1,29,150. This is the amount I'm desiring. Desiring means what? This is the amount I'm expecting it in returns. Okay. Got this point? First part cleared, everyone? Okay. Desired yield means interest on loan. Yeah, it can be anything. Here, it can be anything. Desired yield means it can be interest on loan. And if I have not taken the loan, then it's cash. Okay. Then it's the opportunity cost. It can be anything. Yeah, but one point you can definitely think. Suppose, let's say, take one simple example. If I purchase a flat on loan, okay. Yeah, flat on loan. So definitely, what will I be expecting? I'll definitely expect whatever it comes to me as a rent. I must be able to cover up, means cover that EMI of my this house in that rent itself. That would be my maximum minimum requirement, isn't it? Whenever you purchase any flat and you give it on rent, so what do you expect from that? At least it should cover your no cost, no profit basis, right? So that EMI should be covered in your this rent. It doesn't happen generally initially. Huh? Whenever you buy, see here, if you, that much is that logic you are having, that your rent should be covered by your EMI, even the tenant will be having that logic then, isn't it? Why will he take it from you on rent? Won't he buy it on from somebody, isn't it? If that is the case. So generally this doesn't happen for first 5 to 6 years. Whenever you purchase any property, these things means your EMI is always higher than the rent for at least 6 years. After 6 years, things change. Okay, because the property cost increases. Move on. Chalo. Next one. So now first part is over. 1,29,150. This is my desired rate of return. Okay. Now we'll check what is going out from my means money which I am getting. Okay. Estimated yield is what? See here. This is desired. Desired means what am I expecting? This is what estimated. This is what the broker is giving me. See here. This is, I'll tell the broker, if I appoint some broker, then I'll tell him, see here boss, I want this much amount. Now the broker will tell me, sir, the rate going on right now in the market is 50 rupees per square meter. See, this is the rate going on. You can't get this 129. So I'll tell him, okay, let's find out. So estimated yield is what? 50 into 155 into 12, right? 12 is 12 months. Okay. So 50 into why 155? What is this 155 over here? 155. What is this one? See this carpet area. So broker will tell me, see, sir, you have this flat. You want to give this on rent. But remember, the rate is going on 50 only. So 50 into your carpet area is 155 only. Okay. So he'll tell you that, okay, 50 into 155 is monthly rent into 12 is 93. So you'll get 93,000 only. So what are my outgoings? Outgoings means what? This much is going out from my rent. So 1/6 of the yield, right? It's given over here. 1/6 of the yield. Okay. So it is what then? 1/6 of the yield means 93,000 upon 6. So 15,500 is going out. So what is remaining with me? 93,000 minus 15,500, right? 93,000 minus 15,500. Clear everyone? So this much is remaining to you. 77,500. Okay, got it? Now comes the question of encumbrance factor. Encumbrance factor means whatever I'll be getting at the market rate. Okay, this means after going everything yield going out upon what is my gross income means at the market rate, whatever the actuals for me. As here, what is desired it doesn't come in the encumbrance factor. What is the practicality that comes in the encumbrance factor? So encumbrance factor means after when I get this rent, after that whatever is my society charges, everything whatever goes out. After that what remains that upon my gross rent. So that is known as encumbrance factor. So 77,500 upon 90,000, 93,000. Okay, means what? Net what I'll be getting from this. Here, even though I get a rent of 93,000, my society charges, my water bill, my electricity, my other charges, all these go 15,500. So is this my income? No, that is my outgoing. So what is my net income? My net, it's like that gross profit and net profit. Okay. So my net income is 77,500. So encumbrance factor means net income upon gross income. You can take it that way for simply. Okay. So 77,500 net rent after all the outgoings are gone upon my gross rent, whatever I was expecting means getting from the market. So encumbrance factor is 0.833. Got it? Clear? Yeah. Why 12? 12 months. This 50 rupees is per month. Okay. 50 rupees, this 50 rupees square per square meter. See this carpet area. Carpet area monthly rent is it's given, right? So we are calculating it for year now. So that's why we have multiplied it by 12. Okay, clear? Yeah. Next one. So next is what done this 0.833. Now usable FSI, that is very simple. 533 is my total plot area. 205 is my this what built up. So what is remaining? 328 is remaining. So what is the value of that usable FSI? What is the plot rate now? Property rate, land cost is 2000. So 2000 into this much amount. See this usable FSI means what? This white area which is not used up till now. Okay, so this much I can definitely sell it to somebody. See here, if this is my property, okay, this is my land, and let's say this is my what I have built up. Okay, so this is remaining. If I want some income, what will I tell? I'll bring some builder in and tell him, see this is your blah blah blah. You take this much part of my property. So that's it. That's basically usable FSI, isn't it? So value of usable FSI is what? 328 into this 2000 into encumbrance factor. Why encumbrance factor? Because value means what I'm getting it from there, from that property. So what will I be getting? I'll be getting 0.833 only. So that's why that is the value of my FSI. Okay, always remember value of FSI is whatever is the remaining amount FSI into what is that property cost into this encumbrance factor. Always this formula you must remember. So amount is 546,448. Okay, 77,500, that's subtracted, isn't it? 77,500 says 93,000 minus 15,500. If you do it, you'll get it 77,500 only, isn't it? Got it? Clear? Always remember this formula. Encumbrance factor means what? Rent after all my outgoings are gone upon my gross rent. And what is my usable FSI? What is the FSI remaining into plot cost into encumbrance factor? Got it? Clear? Everyone? Why can I repeat it again? Okay, I'll just repeat it. Okay, for those who have just now joined. Okay, yeah. See here, those who have just now joined, I'll repeat it again. Remember what is given in that problem. Everyone pay focus. I'll be doing it fast now. Huh? Because the problem over here is find an encumbrance factor and the value of the usable FSI. That is your question over here. So all these details are given. Land area, built up area, permissible FSI, rate of construction, rate of land cost, then desired rate of return, usable carpet area, monthly rent on the carpet area basis, and usual outgoings. Okay. So what do you mean by this? See this. Monthly rent is on the carpet area basis given. Okay. And what is the difference between land area and built up area? Land area is this full plot area, 533. Built up means whatever I have built in. This is my building. Okay. So what is the remaining? This all white area which is remaining is usable FSI. Okay. And that is what we have to find, usable FSI and value. Okay. And second is the encumbrance factor. Okay. Okay. So let's move on. Permissible FSI is given as 1. Means what? I can build total 533 square meter on this plot. Okay. After leaving the boundaries, of course. Okay. Yeah. So let's move on. This cost of construction is what? 205. This is given. This is the built up area. See this. This is my building built up 205 into square cost of this per square meter 5,000. So 2,000 205 into 5,000 10 lakh 25,000. Cost of FSI used is 205 into 2,000. What is 205? Again the building into 2,000 is what? Plot cost. See this. Land cost is 2,000. Okay. So add this. This is the total building cost. So what is my desired rate of return? Desired yield. Desired yield is given as 9%. So 1435 this full amount into 9%. So it is 129 150. Okay. Now this desired yield is of no use over here in the problem further. But in exam, they will give you a separate question on find the desired yield, and this will be the amount. Okay. So desired yield is always on the complete building plot plus this construction. Okay. Then estimated yield. This is what the broker will tell me. See this, sir. He'll tell me 50 rupees is the rate going on. What is the carpet area? 155. He'll tell me, see this, 155 is the carpet area over here. So you'll get the multiplication of that per month. So per year it will be what? Multiplied by 12. Isn't it? 93,000 I'll get it. So again, outgoings means what are my society charges, what are my electricity bills, what are my water bills, all these things. Okay. So 1/6 of my total returns yield. Okay. So 93,000 upon 6. So 15,500. So 15,500 is my outgoing. This will go out in form of various names, society charges, water charges, blah, blah, blah. Okay. So what is my net amount which I'll be getting? So that is 93,000 minus 15,500. So 77,500. Okay. So this is the net amount I'm getting in my pocket. Okay. But this does not include the tax which I pay. This is something different, huh? This does not include the tax which I pay. So here from this also, if I pay the taxes, then it will be something else. Generally, I'll tell you, these taxes on the rent are, does anyone know what is the rent tax? Rent tax, does anyone know? Oh, good, yeah. Raju Johar, good, 6975, good, yeah. Does anyone know the value of this tax on rent? Anyone knows what is the rate going on? 30%. Okay. In which city? Because right now in Maharashtra over here, on rent we are paying almost 40 to 45%. 40% we are paying generally over here, Maharashtra. Okay. It's 30%. Okay. I mean GST is extra then because that's what I'm paying. 40, 45% we pay separately over here. Okay, okay, forget it. That's not a question for you in CIB. CIB doesn't carry this question of what is that rent on this because every state might have different. Okay, so next point is what is the difference between what carpet and usable FSS? Here, carpet means where I put the carpet. In our house only, whenever we have our house, where do we put the carpet? Do we put the carpet in the bathrooms, WCs? No, we don't put it there. Then carpet area means where the carpet is put. Carpet will be put in what? All the halls, okay, main living room, bedrooms, kitchen it might be put. Okay, so these all the areas are included. Also, the passages are excluded from carpet area. Okay, these all are in the walls are excluded. Walls, okay, carpet area and usable area. Yeah, it is. Generally, see this in building case we use carpet area concept only, and usable area they. But usable area can be different also because usable area means what if I'm having some garden in front of my house which belongs to my plot. So that can also be considered a usable area. But if it's a flat, then generally it's same. If it's a flat, then normally it's same. Okay. Yeah. So done this estimated. Now we'll find this encumbrance factor. Estimated yield is 93. Got this. Encumbrance factor is what? What is the net I am getting in my pocket upon what is my gross income? So 77,500 upon 93,000, 0.833. So usable FSI equals to what now? Encumbrance is got 0.833. Now I want this value of the usable FSI. So usable FSI is 533 minus 205. This much I have already built. And this much is the plot area, 533. So I can use this much 328 square meter, right? So if I can say use this, I can sell it to somebody also. So what is the value of the usable FSI? 328 into this plot cost, means land cost 2000, into encumbrance factor 0.833, means this will be the net result for me, net returns for me if I put it on rent, isn't it? So 546, 448, right? This much can be the income generator for me. That's the meaning of this calculation. Okay. Yeah, why desired yield is calculated? Because it's a separate question. It's not given over here, but it's of no use in calculation of encumbrance factor. Only the point is there is a separate question on desired yield. That what will be the desired yield? So there you'll get this as 9%. Okay, got it? Chalo, next one. Capital gains. Now this is second problem which we are doing. Okay. This problems here, there are two types of capital gains. I'll cover some theory part also over here because that is also important for you. So firstly, what I'll do is I'll cover this theory part only. What? Let me see. This is for property or this is for in shares. Without indexation. This indexation LTCG 4.20 lakhs This is this is same thing. Rent 5%. No, this is separate. Okay. So see this. This is a new numerical on capital gains. Now, capital gains means what? This tax, here, this has nothing to do with that earlier one. Huh? Capital gains means what? What do you mean by capital gains basically? What is the meaning of capital gains? Capital. Did we hear this word earlier in our some studies somewhere? Did you ever hear it? Capital? No, did you ever hear this word capital somewhere? In JAIIB or somewhere? Right? You heard it. Where? Capital expense and revenue expense, capital income and revenue income, right? We studied it in JIB. Okay. Yeah. What is capital income? Sure. Let's understand the concept of capital first. Capital income means what? Capital income means if I sell my property, that is my capital income. Sure. Capital things are never done on a daily basis. Do you sell your property? If you're having some property, you have some flat, do you sell it every year? No, because that is a fixed asset. Okay. Suppose if I sell my car, so that is again a capital income for me, right? But what is my revenue income? Revenue income means whatever I do the business. Suppose if I am the shopkeeper, okay, in shopkeeper, if I'll sell all these general items, kurkure and lays and all these chocolates, everything, that is my revenue income. But if I sell my furniture of the shop, right, which will decrease my assets, that is capital. So understand the concept of capital first. Okay, so now capital concept is clear. So let's move on with the capital gains now. Suppose if I am selling my flat, see, our capital gains can be of two types. Okay, one is for physical assets, second is for that what virtual assets. Virtual means what? They are on the paper. Like what are the virtual assets? Shares. If I'm having some shares, then it's a capital gain. Okay, if I'm having some bonds, okay, then also it's a capital gain. Okay, so capital gains are generally for these. One is fixed assets and second is these virtual assets. Again, capital gains can be of two types. One is short term capital, second is long term capital. Short term is generally within 1 year. 1 year. Okay, means if I purchase some share and sell it immediately within 1 year only. Suppose if I purchase Reliance now and after 3 months it goes to higher amount and I'll sell it. So it is a capital gain to me, but that is short term capital gain. Okay, but if I purchase that Reliance and keep it for 10 years and after 10 years I sell that Reliance share, so that is again a capital gains for me, but that is long term capital gains. Okay, so this is the difference between short term and long term. Short term means within 1 year, long term means after 1 year. Okay, now the rules are different for property and rules are different for shares. We'll study each one. Why? Because each one will come to you in exam. That is important. Everything will come to you in exam. Okay. So what we'll do is first we'll try to cover up some theory of this and then we'll cover this problem. Okay. Because theory is also equally important. In fact, retail theory is more important than problems many a times I've seen. Okay. So let's start. Yeah. This theory part. See this. Firstly, we'll cover long-term capital gains on property. Suppose if it's a property, okay? So long-term capital gains on property. I'll expand the screens for so that everyone will be able to view it. One sec. Am I able to? Are you able to see this? Let me see. Yeah. Long-term capital gains on the property. So this is a full theory given. We need not go into details. Okay. For CIB, we need only two things: long-term capital and short-term capital gains. See this. So long-term capital gains and short-term capital gains. So this bifurcation between short and long-term is done to understand the tax implications. For instance, transfer on sale of property, housing property, triggers taxability on the same for SSS, which can be either long-term or short-term. If the individual if the individual had purchased the property 10 years ago and sells it now, the property will fetch significant corpus. Okay, so now you have understood it. I'll skip this part. When the capital gain is considered as a long-term capital gain, according to Income Tax 1961, any immovable property with a holding period of more than 24 months is classified under long-term capital assets and is liable to be taxed on LTCG on property rules. So remember, for property, any property which is held more than 24 months means 2 years is considered as a, and if I sell it then means what? If I purchase the house now and if I sell it after 2 years, then it will be long-term capital gains for property. Okay. And for shares, it is different. That's why I said the rules are different. For physical assets, rules are different. For long-term, this virtual assets, rules are different. Okay. So 24 months for property, got it? Clear? However, without execution, blah, 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 let me see. Nothing of any use to you in CIB. Only this 24 months was of use. Okay. How to calculate it? Now, this is very important for you. Everyone pay attention. How to calculate long-term capital gains? Okay. What you do is, see here. Firstly, look at this. Take the sale value of the property. Sale value of the property means what? Suppose if I purchase a flat for 10 lakhs and sold it for, let's say, what, 20 lakhs. Okay. So this sale value will be 20 lakhs. Okay. So sale value accrued or received against the transfer of property. So whatever I have received, yeah, screen BFM. Okay, good, yeah. BFM case study. Gaurav, 64. Good, very good. You know, so see this. This is my sales price, and now look at what are we subtracting? Less, 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 less. Everyone pay attention. Why am I telling you this? Because in exam, it won't be only problems. Understand this concept. What am I telling you? It won't be only problems, means you won't only get case study on this. You can also get theory on this. The theory will be like, suppose they'll give you that while calculating the long-term capital gains, expenses incurred in the course of transfer of property means legal charges for transfer of property. They are added in the sale value or subtracted in the sale value. That will be asked to you. So then you need to pay attention over here. So sale value less minus, okay, expenses incurred in the course of transfer of property means if the agreement cost, the all the charges of stamp duty are on my head, means seller's head. Okay, this is for seller. Okay, if it's on the seller's head, then I will subtract that value of that legal charges from the sale value. Again, less cost of acquisition of the property after indexation. Now this is also important. After indexation means what? Suppose if I had purchased that property for 10 lakhs and I've sold it for 20 lakhs. So my purchase value is not 10 lakhs then. I'll have to add the indexation price for this. Now what is the indexation price? That I'll show you in the problem right now. Okay. But first you must remember this concept. What? The cost price is always taken on indexation, after indexation. It is never before indexation. Got it? Only pay attention to these two parts. Don't pay to this third part. Okay. This is here. These expenses include here legal charges. Okay. These include costs like brokerage charges, commission, registration, stamp duty, lawyer's fee. All these are subtracted. Okay. What are these charges? Cost of acquisition of property after indexation. Cost of acquisition refers to the cost incurred during the time of asset acquisition. Indexation is a calculation of the cost after taking the effects of inflation into account. So, what is indexation? Indexation is basically inflation. So, at that time, 10 years ago, when I purchased the flat, the inflation was that much. Now, the inflation is this much. So, I'll have to add that cost. Okay. So, that's why what are we doing? Cost of acquisition after indexation. Okay. So, two things subtracted. Third one, less cost of asset improvement after indexation. Means if I have taken this flat 10 years ago, then I built one room over there, or I've done something good painting over there. Okay, all these costs which have been incurred, so those will again be subtracted from the sale value, because after all, this money is gone from my pocket, isn't it? So that's why what I get over here is sale value less all the income middle charges, less the cost with indexation, less the improvement cost with indexation. Okay, got these 3 points. Everyone pay attention. Okay. Now after that, what I get is this gross long-term capital gains. So this is my answer. Gross. This is my long-term capital gains. Okay. Gross. After that, what are the exemptions? So there are exemptions over here. There are exemptions available under the section 54, 54 EC and 54B of long-term capital gains on property. So these three sections, everyone write it down. 54, 54 EC and 54B. Okay. Nobody will be asking you what are these sections. Okay. But they'll only ask you what are the sections for these capital gains. They won't ask you the details of this. Okay. So remember 54, 54 EC and 54B. These are the sections for long-term capital gains. Okay. And after subtracting the exemptions. Okay. Then what I get is a net long-term capital gains. Okay. Got it, everyone? Move on. Now, what is this CII? This inflation index. Here we did this indexation. This indexation. What is this indexation? So that is basically over here. See this. Cost inflation index. CII index is published every year by the government. Every year. See here. 21, 22 was this much. 2021 this much. All these things. Okay. So that is the indexation effect. So this was the inflation at that time, or expenses. We call it mehengai at that time, right? So those expenses or inflation at that time, and this is my inflation at this time. Suppose if I sell the flat in 20 and 22. So this is my inflation index in 22. This is my inflation index in 18. So this will be subtracted, okay? Or this will be added to my cost and I'll bring it over here to 21, 22. What do we do basically using CII, means cost inflation index? That I'll tell you while we solve the problems, okay? Now you only understand the concept. CII is published every year by the government, okay? Okay. So, yeah. So here, inflation refers to the sustained price in rise in price over the 3 years, over the years. To account for the rise in the value of the asset due to inflation, income tax has introduced the cost inflation index. The table is given below. Okay. So this is introduced by income tax department so that one does not get too much huge capital gains. Otherwise, here, if this is not there, CII is not there, and I purchase a flat on 10 lakhs and sell it for 20 lakhs, ah, 10 lakhs will be my capital gains in that case. But if I use the inflation index, CII over here, then my capital gains will get reduced over here. Got it? Okay. After indexation, I'll tell you. Indexation will solve the problem on this. Okay. Shallow. Okay. Not to worry about that. Right now, just I'm telling you the theory over here. Okay. Tax implications of LTCG. Currently, long-term capital gains are taxed at 20% in addition to cess and surcharge. Okay. So net long-term capital gains right now is 20% for property. Okay. For property, 20%. And property is totally with indexation. property is never without indexation in India. Okay. This rate is applicable to flats sold after 2017. Now there is one more question which comes to you. Inherited property. See, this tax implication is not valid for inherited properties. Means if you are having some house from your forefathers, so for that this LTC, this tax implication won't be applicable. For example, ancestral properties inherited from the family members by way of gifts will not be taxed until the inheritor decides to sell the same. If the said individual sells the property, then the long-term capital gain generated will be taxed under the same rules as applicable to other properties. Means ancestral property, if I sell it, only then it is taxed. Means capital gains. Otherwise, it won't be taxed. Okay. Few are the crucial points to remember about LTCG. So, what are the important points about LTCG? Individuals can adjust their sale consideration of the asset to include any commission or brokerage charges they paid before the acquisition of the same, paid during the acquisition. Okay. Means, see, a brokerage can be adjusted. Means that only less, all these three things. SSEs can choose to deduct additional expense incurred due to home improvement or construction in the cost. Means again less, okay? Improvement cost. That is also with indexation. And these are the three sections we have already studied, told you that. 54, 54B and 54 EC, okay? Tax exemption on long-term capital gains on property. So what are the exemptions available? Say this. The imposition of 20% long-term capital tax on property can lead SSS to incur a significant amount of tax liabilities. However, there are certain exemptions under the Income Tax Act. Okay. So what are the exemptions? See this. Following are the few exemptions available under long-term capital gains. Okay. So what are the exemptions available? Under the section, SSC can avail tax benefit on LTCG for sale of house property if they invest. Look at this. If they invest the same in purchase of up to 2 house properties. Means up to 2 house properties. Means what? Suppose if I am having one flat, I have sold that flat. So whatever is the capital gains I'll get. Understand this, huh? Whatever is the capital gains I get. Means 10 lakh I brought the property, 20 lakhs I have sold it, and after indexation, let's say my net capital gains come out to be 5 lakhs only. Okay. So in that case, the 5 lakhs, which is my additional income, remember, only about, they are talking about the additional income, not my principal amount. Okay. So whatever is the capital gains from that, I'll have to pay tax on that 5 lakhs, whatever is income from me, net income for me. So that I can save if I invest that 5 lakhs in any property, means house property, within, is it given the time duration? It was there earlier. If they invest the same in up to 2 house properties. So 2 house means what? Up to 2. Means if I go on purchasing the houses, okay, 1, 2, 3, 4, then the LTCG is not applicable. This exemption is not applicable. It is only applicable up to 2 houses. First house which I purchase and second house which I purchase. Okay. Generally, first house is the house where we live in. Second house is the house which we purchase for investment purpose. Okay. This exemption can be availed by the assessee only once in his or her lifetime, under the condition that capital gain should not exceed corpus of 2 crores. Now look at this. Very important conditions over here. See this. This exemption only once in the lifetime and also not more than 2 crores. Getting it? Okay. Yeah. Then next. Also, taxpayers have to invest the capital gain amount and not the sale proceeds collected while selling the assets. If the purchase price of these new properties exceeds that of the previously acquired capital gains, tax exemptions will be applicable only to the capital gains. That's okay, and not to the entire amount. That's a common sense. Means, suppose here I'm having a flat of 10 lakhs. I sold it for, let's say, 20 lakhs. Okay. So my capital gains are, let's say, 10 lakhs. But if I use the indexation, I'll show you what the indexation is. Huh? If I use the indexation, then my capital gains reduces. It doesn't remain 10 lakhs. It remains 5 lakhs. Okay. So now this is my profit, 5 lakhs. Right? Capital gains. Gains means profit. So this is my profit. Now if I purchase a property, another property of, let's say, 40 lakhs. Okay. So I'll use this 5 lakhs, which is my profit, and claim tax benefit on this 5 lakhs. So this sentence says that I can't use the tax benefit on entire 40 lakhs property. I'll have to claim only on 5 lakhs, but that is common sense. Capital gains is only capital gains, gains. Remaining amount is my principal. I might have taken the loan, isn't it? Yeah. Next one. See this. Yeah, the condition of 2 years. See this. That's what I said. There was a condition earlier. The purchase of new property must be completed either in 1 year before the sale of the current property or 2 years after the sale. Now, this is very important. Huh? There is one more condition, third also, I'll tell you. See here, if I'm selling this house right now, okay, and I'm gaining some capital gains, so I'll have to buy that new house to save this capital gains tax, okay. I'll have to buy that new house within 2 years, okay, after the sale of my first flat, or 1 year before the sale of my first flat. Means if I'm selling this flat today, either I should have bought some earlier flat within 1 year, earlier 1 year, or I can buy the flat after 2 years, means within 2 years from today's date. Okay, that is the point over here. Now there is one more leeway given, means some we can say advantage given to that buyer. Instead of purchasing a new property, capital gains can also be invested in due course of construction of a property, given that the construction must be completed within 3 years from the date of the property. So, if I purchase a new flat, okay, that should be within 2 years. But if I go for under construction flat, so that can take 3 years. So, under construction flat is allowed for 3 years, ready possession flat is within 2 years, or 1 year before the sale, either of these two, okay. The exemption can be retracted if the new properties are sold within 3 years from the date of construction. Now, this is again a different part. See this. What do you mean by this? Suppose if I, let's say, purchase a new flat, means I am having this capital gains of 5 lakhs. I purchase another flat, okay? And then I'll claim capital gains on benefit on that from the government. I won't pay tax on this. But what do? I sell that flat which is purchased within 3 years. So again, your income tax will come to me and tell me, see, you have sold this flat within 3 years. It means it was not for your capital purchase. You had a revenue angle on that. So the exemptions can be retracted if the new properties are sold within 3 years of the construction of or purchase. Okay, got it? So got these points, everyone? So what are the tax exemptions available now? Say this. Following are the conditions. Individuals can avail these exemptions on the long-term capital gains on the property if the profit from the selling the property is reinvested to purchase specific bonds. Now, what do you mean by this? See this. What was given over here? Suppose if I sell the flat and I get a capital gains of 5 lakhs, let's say, okay? Understand the conditions clearly. If I sell the flat, I get a capital gains of 5 lakhs. So what can I do with that 5 lakhs? I can either invest it in some new flat for within 2 years, or I can invest it in a property, means under construction within 3 years. Okay. But if I don't want to do both of these, I don't want to buy a new house now. I don't want to buy under construction also. So government says if you don't want to do that, but then also you want to save the tax. In that case, what you do? You invest it in bonds. Now, which bonds? Now, these bonds are given over here. Okay. So, these are the bonds. SSC can choose to reinvest the profit generated from the sale of the property into the investment schemes like bonds for an amount of 50 lakh. Here, for up to an amount of 50 lakhs. Mean this can be invested only up to 50 lakhs issued by REC and NHAI. So REC bonds are there, NHAI bonds are there. Okay, you can invest it in that. These are all called as capital gains bonds. Okay, these are always sold by these companies. In fact, CAIIB also sells one. CAIIB. Okay, has anyone amongst you sold these bonds anytime in your life earlier? Has anyone sold these bonds? CAIIB bonds, REC bonds, capital gains bonds. Have you sold anyone? Yeah. No? Okay. See here, these bonds are generally from investment angle. Means suppose if I have sold some flat, I have got that income, and I don't want to purchase a flat here. Generally, what happens in India? What happens? I sell a flat or I sell some property and buy a new property, isn't it? That's what I do. So if that happens, then no problem. Invest it in 1 year, or 2 years, or 3 years under construction. But if I don't want to purchase a new property, I want to put it in my shares. Who can stop me? After all, that's my money, isn't it? So government says you can put it, not an issue. So if I want to put it in shares, government will say, okay, what is the capital gain? This much. Pay tax on that. And after paying the tax, yeah, there is no screen. I have stopped the screen over here. Okay. So after paying the tax, what you do is you invest it wherever you want, right? That's what the government will say. Or the government will say, what you do is next, you invest it in these bonds, REC bonds, NHI bonds. Okay. Assessee can redeem the invested amount after a period of 3 years, but cannot sell the new purchased flat within 3 years. Okay, that's the condition just now we discussed. Means if I purchase a new flat, and you get the capital gains tax in this. Okay, but in that case I can't sell that flat within 3 years from the purchase. Okay, so got this condition. Suppose I'll ask you one question now to everyone. Okay, suppose today I sell some flat. Okay, everyone pay attention. Today I sell some flat. Okay, and that flat had a capital gains of, let's say, 10 lakhs. Capital gains of 10 lakhs. Okay, today I'm selling that flat. Huh? I've got this capital gains of 10 lakhs. My first question is, up to what time or up to what year can I purchase a furnished flat, means complete flat? Up to what year can I purchase the complete flat, means whichever has been completed? So up to what time? 2 years, right? Means 2022 it is December. So it will be 24, isn't it? Yeah. Priya, I could clear BFM since pending long. Okay, I had not applied since many years. Consider that. Okay. Good, good, yeah. Good. Congrats, Priya. Congrats, yeah. All those who have cleared BFM, congrats to them, everyone. Okay. All those who have cleared BFM. I think everyone has cleared, isn't it? I think so. Everyone might have cleared over here, or they might have been cleared earlier also. Yeah. Congrats, sir. Congrats, everyone. Yeah. Punya 49 means okay, yeah, you have cleared it. Okay. Yeah. 55 in retail. Yes, definitely. Here, what I'll tell you, target 60 in retail. My target to every student of yours is not 50. My target to every student of you is 60. I want 60 marks from each one of you. Each one. Okay. Each one it should be 60 marks. Forget this 50 marks concept. Okay. Yeah. 50 marks is out, man. In retail, if you get 50 marks, then I don't consider you have studied. You must get at least 60 marks. At least. That's what. Otherwise, then what? It's great. Means if you get less than 50, and even if you pass, then I don't consider you have studied at all. Your target should be minimum 60 marks. 60, 60, 60. Okay. Move on. Owners of the asset say, what, where were we? Yeah, 3 years concept. Okay. So my question was there that if I purchase a constructed house, then in 2 years. If I purchase a what under construction house, then if I purchase a under construction house, then 3 years. Correct. Now I'll ask you one difficult question. Yeah, 225. Correct. 2025. This is what 22. Yeah. So up to 2022, you can purchase it. Okay. Now my question to you is different. My question is, suppose if I purchase the flat, ready-made flat, let's say ready-made flat. Huh? Now my question is, ready-made flat. Huh? Everyone pay attention. Ready-made flat. If I want to purchase a ready-made flat and sell it also again. So what is the minimum time I can have for purchasing that flat and selling it? Purchasing and selling it. Purchasing and selling it. So what is the maximum? Tell me in the year 2026, 2027, 2028. What is the year you are expecting? 22 is over here. Okay. So 2 years from now means 24. Okay, maximum you can purchase up to 2024 December, this date. Okay, you can purchase, and after that you can sell by what period? You can sell after 3 years. So 2027. So 1st December 2027, I can sell that newly means flat which I have bought. Okay. Now if I purchase a under construction flat, so then the year will be 2028 for selling. Why? Because earlier I've got 3 years. So 3 years from here, then 3 years from next. Okay. So that is the logic. This logic needs to be cleared in your mind. Okay. Clear everyone? If I get a new flat, so within 2 years, and I have 3 more years for selling. If I get an under construction flat, then 3 years and 3 more years for selling. Okay. Also remember, there is one condition that I can purchase a flat earlier also. So that is before 1 year, means 2012. This is, I can purchase a flat up to 2011 December. Okay, even if I have purchased something in between, that can also be used for this capital gains exemption. Got it? Move on. Chalo. Move on with the topic. Yeah. So what is the new part? Yeah. Owners of the asset choose to invest the gains from selling the property into these bonds within 6 months from the same. See here, if you don't want to purchase itself December 5th, morning 7 a.m., 7 to 8 a.m. and evening 8 to 10 p.m. Join this batch ASAP. Now how to join, what are the discounts, I'll show you everything over here. Okay. See this, go to Adda 24/7. This, if you are having the app, I would say go to the app. Okay, you'll get 1% extra. Okay, discount. Otherwise on website also you'll be getting, see here, I'll show you the discounts which you are getting. Go to Adda 24/7, click on JAIIB and CAIIB. You'll get all the exams over here. Click on this CAIIB November December English batch. Okay, now you'll see all the batches over here. Now BFM is over, everything is over, isn't it? Only retail is remaining. Click on the retail. 50 case study batch. It's actually not a case study, it's a revision batch. Okay, we cover all the revision over there. So 10 plus hours of two-way interactive classes, ebooks are available, detailed subject-wise expertise, recorded videos are available, English medium classes, and for December. Okay, you can read the highlights over here. Everything you can at your ease, you can read it. Now I'll talk about the fees. 3599 is the fees. What you do is click on view offers. Once you click on view offer, just put the code Y432. Okay, Y432. Now click on apply. See, you have got 80% off is going on. 3599 has been reduced to 719. And event, see here, ABM BFM is clear. So retail is a bit easier, but don't take it lightly. So once you clear this CAIIB retail, so understand what will happen. Once you clear this retail, you will get 1000 at least increment. So this will be recorded in how many months? 1 month. Okay. So go for it immediately. Okay. So before going, I'll again tell you about the May 23 exam which is coming up. See, this May 23 exam has, the portion of that exam is 4 compulsory subjects: ABM, BFM, ABFM and BRBL legal. Okay, and this is ABFM new. These are the 2 new topics. Okay, so these 4 compulsory topics plus electives, all the 5 electives: rural, HR, IT, central banking and risk. Then there is a negative marking. Okay, there is also a subjective question which is not, I have not mentioned. So that's why I say, if you have cleared ABM BFM, just clear